Imagine having an 850 credit score. Banks trust you. Lenders approve you instantly. Credit card companies send you exclusive offers. And yet, your bank account still feels empty. You're making decent money. You're doing everything right, but somehow, you still feel broke. Here's the uncomfortable truth most people don't realize. A high credit score does not mean you're financially successful. In fact, sometimes it means the opposite. Because the financial system rewards one thing more than anything else. Not wealth, not savings, not ownership. It rewards good borrowers. And today, I want to show you why chasing a perfect credit score might actually be keeping you poor. By the way, if we haven't met before, my name is Walter. And on this channel, we break down money, psychology, and the systems behind personal finance, so you can make smarter decisions with your money. Let's start with the biggest misunderstanding people have. Most Americans think a credit score is a financial report card, like it measures how good you are with money, but that's not what it measures. A credit score measures how profitable you are for lenders. That's it. It tells banks one thing: can this person borrow money and reliably pay interest for years? Think about it. If someone never borrows money, never carries credit card balances, never finances cars, never takes personal loans, what happens to their credit score? It usually becomes average, not because they're bad with money, but because they don't use debt enough. And that's the strange paradox. The people building wealth quietly in the background often don't have the highest credit scores, but the people constantly financing their lifestyle. New car loans, credit card points, buy now, pay later purchases. They often do, because they're active in the credit system. Let me show you how this trap works. Imagine two people, both are 28 years old, both make about $75,000 a year. Person number one, let's call him Jason. Jason has an 820 credit score. He has 3 credit cards, a financed car, and he keeps a small balance on his cards because he heard that helps his credit. Every month he pays interest. Not a lot, maybe $150. Doesn't seem like much, but that's $1,800 a year. Over 5 years, that's $9,000 gone. Now meet Ryan. Ryan's credit score is 720. Still good, but not elite. Ryan uses 1 credit card, and he pays it off completely every month. No interest, no car loan. He bought a reliable used car in cash. That $150 Jason spends on interest every month, Ryan invests it. Over 5 years, that becomes more than $11,000 invested. Jason has the better credit score, but Ryan has the better financial position. And this happens everywhere. Because people are optimizing the wrong number, they're chasing credit score points instead of financial freedom, and the credit industry encourages it, because the system is brilliant. Think about how credit cards are marketed. Cashback rewards, travel points, exclusive cards. It feels like a game. Swipe more, earn more, level up your credit score. But the real game is happening behind the scenes. Interest, late fees, debt cycles, and the numbers are massive. In the United States, total household debt is now over $18 trillion. Credit cards alone account for more than $1 trillion of that. And most of that debt belongs to people who actually have good credit scores, because lenders don't give large credit limits to risky borrowers. They give them to people who look responsible, which means the better your score becomes, the more credit the system offers you. Higher limits, bigger loans, more lifestyle inflation. And this is where psychology quietly takes over. Because humans are wired for status comparison. You see a coworker driving a new car, you see friends traveling on Instagram, you see people buying nicer apartments, and your brain says something dangerous. If they can afford it, so can I. But what we don't see is the debt behind the image. Payments, interest, financial stress. And that's where the credit score trap becomes dangerous. Because it slowly changes your mindset. Instead of asking, can I afford this? You start asking, can I finance this? That one mental shift changes everything. Financing turns expensive things into small monthly payments. A $40,000 car becomes only $620 a month. A vacation becomes only $90 a month. A new phone becomes just $35 a month. But payments stack. Car payment, phone payment, subscription services, credit card minimums. And suddenly, most of your income is already spoken for. Not because you're irresponsible, but but because the system makes borrowing feel normal. And here's the uncomfortable part. Banks don't make money from people who pay cash. They make money from people who borrow, which means the system doesn't reward wealth. It rewards dependence on credit. The more you borrow responsibly, the more the system likes you, the higher your score goes. But your net worth? It might not move at all. That's why some people with incredible credit scores still live paycheck to paycheck, because their entire financial life is structured around payments instead of ownership. But the wealthy think differently. They don't optimize for credit scores. They optimize for control. Control over expenses, control over investments, control over their time. And the biggest shift happens when you stop asking, how do I increase my credit score? And start asking, how do I increase my net worth? Those are two completely different games. One rewards borrowing, the other rewards ownership. One benefits lenders, the other benefits you. Now don't misunderstand this. Credit scores still matter. You need them for mortgages, certain loans, and sometimes even renting apartments. But they should be a side effect of good financial habits, not the goal itself. If you pay your bills on time, use credit carefully, avoid unnecessary debt, your score will rise naturally. But your real focus should be three things: building savings, reducing debt, buying assets that grow over time, because at the end of the day, your credit score won't pay your bills. Your investments will. Your credit score won't buy freedom. Your assets will. And the sooner you understand that difference, the sooner you stop playing the bank's game and start playing your own. Before you go, if this felt a little too accurate, if you recognized yourself in some of those situations, comment margin below, because the real goal of money isn't status, it's margin. Margin between what you earn and what you owe. Margin between your income and your expenses. Margin between stress and freedom. And if you want to learn how to build that margin, subscribe. My name is Walter, and here we don't chase income fantasies. We build leverage, one decision at a time. I'll see you in the next one.